parity between the two currencies. Of course, inflation in the Eurozone is also expected to pick up slightly this year, but the central bank, the European Central Bank, unlike the Federal Reserve, is not expected to increase interest rates or end its super generous monetary provisions anytime soon. And that's something that speaks for a weaker euro, a continuously weaker euro, and a rising dollar.
Well, Conrad, it looks like a bit of a positive day for the global markets. We've spoken about the equities. On the economic data side, of course, the U.S. economic data, some data will start out from today. But look at the oil prices on a strong rally today. Woke up early today, and I was looking on a Bloomberg, and I was looking at $16 for the Brent crude. And as we speak, the WTI for the U.S. crude is about 2%, 2.2% to the north as well, heading above $54 a barrel. Well, because Kuwait has decided to kick off the output cutback agreed by OPEC and non-OPEC in November. So do you think this is a piece of news that investors think will sustain the market activity this week and perhaps next week?
Oh, Busen, everything depends on this kind of news. As long as the OPEC and non-OPEC countries which agreed on those production limits stick to their word and deliver this kind of news, of course, this will be a support for the oil price. But mind you, I think this speculation is also on shaky ground. Yesterday, I read in a newspaper about speculations that Libya might leave OPEC because the country is not ready to accept the production limits. Any more kind of news in that direction, of course, has the potential to put pressure on the oil price. So I would say seize the moment, Nigeria. The oil price is at the highest level in a year and a half, and you guys should be happy about it as long as it stays there.
Okay. Thank you very much, Conrad Busen of DWTV for Channels Television at the Frankfurt Stock Exchange for that telephone conversation. We have a lot to talk about in the week as the U.S. will roll out a set of its own economic data today. Let's move on very quickly back home to Nigeria. We're sticking with the oil story about the crude oil prices racing above $56 a barrel as we speak. Looks like the good news anyone can think of. $42.50 was the benchmark for Nigeria's budget 2017. 7.3 trillion naira a budget. So let's discuss this a little bit further. Let's get a bit of a sense of this from our local analyst, research analyst with financial derivatives company here in Lagos. Desola Sumani is joining us from downtown Lagos to weigh in on this conversation. Desola, it looks like good news this morning. Thanks for joining us and the first time seeing you in 2017. Welcome to the program.
Thank you for having me.
We can have a lot of smiles here when crude oil is moving higher, isn't it? It brings smiles to everyone's face.
Seeing the price at $50 per barrel is fantastic news. And even seeing early signs of compliance to the OPEC and non-OPEC deal, we've seen now Kuwait has already cut production by about 130,000 barrels per day. We've also seen Oman has indicated, I've already told our customers that they're going to cut output. So I think that we are seeing early signs of production deal, and the market is already in a bullish mode. So we expect the price rally to continue.
Yes. So with Kuwait kicking the can down the road as far as the cutback in production is concerned, who's likely going to come next?
We really can't tell. We are just waiting for OPEC data for January to see which countries have already started cutting production. But Iraq has also given signals that they would cut production, starting from the heavy and the medium grades of crude. So let's wait and see.
But of course, I'm sure for those of you who are analysts and everyone, we know that the big elephant, two big elephants in the room, or three to be more precise, is Russia, Saudi Arabia, and, well, I don't want to use the terminology, the cantankerous Iran that spoiled the party sometime last year.
Already indicated, although Russia has already indicated that they are willing to cut production by 300,000 barrels per day. Although the data from December showed that their production level is still at the 30-year high of 11.2 million barrels per day. But we are hopeful that they would stick to their word. I mean, what will keep this rally going and keep this optimism alive is that if the OPEC and non-OPEC members stick to their word and actually comply with the production cuts. I think that would be good for Nigeria.
Yes, that would be good. Russia is bringing 300,000 barrels of oil to the table. That's quite significant.
Yes, it is. Yes, it is.
And that should move price to the upside. We're getting close to $60 a barrel. Perhaps I'm the one getting a little bit over optimistic here. Do you see $60 per barrel this month as soon as everybody's done with the cutback 1.7, close to 1.750 million barrels per day?
$60 per barrel is very, very visible. In fact, I would be surprised if we don't see $60 by next week, because we're already seeing some form of compliance with Kuwait, with Oman, with Iraq also indicating that they are willing to cut back. So $60 is not far-fetched at all. We think that $60 will see $60 by the end of the month, and the rally would probably continue, provided that there is compliance to the OPEC deal.
And this is one news for Nigerian leaders in Abuja as they start formal business today. They're looking at this, isn't it?
Yes, of course, definitely they are looking at it. But apart from even the rally in price, we're also looking at the peace in the Niger Delta area. In the past 2 months, I think there've not been any attacks on the Niger Delta region. So we're expecting that production, some companies, IOCs that declared force majeure last year will begin to lift force majeure. It will lift the force majeure and begin to export crude. So we expect that production can reach at least 2 million barrels per day, and then we can begin to see some increase in foreign exchange revenue and government.
Desola, thank you very much. Sumoni from Financial Derivatives. That's very interesting news there. The militants seem to have been quiet for more than a month. Thank you, we may say to them, and thank you to the government for keeping them quiet down there in the Niger Delta. Let's squeeze this in very quickly before the break. We'll talk about Venezuela. Now, the Latin America top oil producer is using a new dollar debt of $5 billion for the first time since 2011. The central government says it will sell these notes maturing the year 2036 at 6.5% coupon to the state lender, Banco de Venezuela, and the central bank. Bloomberg reports says details of the new bond was scanty, but the new notes might be linked to Chinese lending. Venezuela is cash-strapped, rationing essential items of food and medicine as the country's revenues slump on weak oil prices and the government debts pile up. Venezuela's benchmark dollar bond maturing 2017 or 2027 rises from $41.13 on the dollar at the start of 2016, finishing the year 51.25 cents on December the 38th, currently yielding a record 20.7%. Let's leave it there. We'll be back after the break.